Hello, hi everyone. This is Arun from Investing Gurukul. So today I will look at HEG Limited company. So this would be a bit of a deep dive and look at where they are, how does the market look, um, and also look at what are all the growth factors in them, and why I think like it's a company that I would like to buy here and now. And of course, before I begin, I would like to put a disclaimer. So yeah, this is not financial advice. This is just my opinion. And you can read the disclaimer here, take your time and read them. Yeah. So now jumping on to HEG. So HEG is incorporated in 1972. It's Hindustan Graphites. So they are the leading graphite electrode manufacturer in India, and they do 80% of their manufacture what they manufacture they export. So that means that the more they export, say to countries like US, where they get the money in USD. So you have the USD depreciation. So that all goes into the bottom line, right? So their clientels are like ArcelorMittal, POSCO, all the big steel manufacturers. Now, HEG also manufactures a specific type of electrode, graphic electrode, which is like the ultra high power. So, which is like the cutting edge, versus like, if you see Chinese graphite electrodes, they are doing the blast furnace based steel. So, um, it is not in the cutting edge, but still, what China do in the steel manufacturing and the electrode business does have an impact worldwide in terms of the pricing. Now, HEG is part of the Bhilwara group. So this is also important. There are certain changes that are going to happen at the group level. We will also see that. Now, with the graphite electrode, so it's a consumable for electric arc furnaces used in the steel production, functions as electrical conductor in EAFs. It has a high entry barrier, so that's important. It has a very good moat. So now, of course, it really, since it is tied down to the steel industry, if the steel industry do well, they do well. Now they are having a restructuring plan that's coming ahead. So they have a lot of businesses. One is main businesses around the graphite electrode, which like contributes like 90% of their revenue currently. But then they are shifting focuses in other areas, like graphite anode manufacturing, which is like for your lithium batteries, it's important. So they are also moving towards other carbon-based materials. So what they thought was, okay, let's divide the company or like make two entities. So their plan is like they would do a carbine, like a new graphite entity, which would only be looking at the graphite electrode business. And HEG, which we are having today, it will go through a demerger and then it will merge. So that entity will be actually green energy and advanced carbon. So what we see HEG today is purely graphite electrode business and plus others. So what they're going to do is like a demerger of the graphite business into a new entity and merger of Bhilwara Energy Limited into the HEG. So this, I think, will go through some timelines, and I'll keep track of it and let you know when that happens. So, of course, when you have one listed company and then you are now moving into two different spaces, so that means that there will be some kind of a shares consolidation. So they have given some, more details on their filings, so you can have a look at it. So, I mean, long term, this is good because it kind of shifts the business focus and keeps the focus in two different companies. So each company would have their own management. So you have more focus. So more focus means more shareholder value. So that's a very good value initiative they have. Apart from that, HEG also been, they have from their 2018 period where they made a lot of money from the graphite electrode price rise. So they had a lot of cash in their books. I think they have like around 950 crores. So out of that, in September 2024, they took like 250 crores, and then they invested into a new in a NYSE listed US listed company called as Graftech. It's a very interesting initiative because GraphTech um, used to be like a $3 billion US dollars base market cap back in 2018. But then due to their cost and pricing issues, they have been like going down and down in the worth. And right now their market cap is like 300 million US dollars. But then if you look at their so this is GraphTech's um, Yahoo page. So you can see that their market cap is currently 300 million US dollars. The interesting point is they have $256 million in cash alone, and their enterprise value is like 1.13 billion US dollars. So the best part about this is um, for making graphite electrode, you need input is needle coke. Needle coke is the input, graphite electrode is the output. And Graphtech International is the only company in the world which is backward integrated, meaning that they are backward integrated with the raw materials. So that means um, they get a very good cost in terms of their raw materials, and which then means that when they produce a graphite electrode, they can get a very huge margin. And that's how they made also a lot of money back in 2018. And at that time, they even gave 70 cents in dollar terms or per share as a special dividend. So like 250 or $200 million, they gave it as a special dividend. So, just 10% if you are owner, then you are getting like 10, $20 million just as a special dividend, which would be like 200 or 150 crores in Indian rupee terms, right? So right now, HEG has already taken a stake in them for 8%. And now in the last 1 month, they again put um, like a release saying that they are increasing their stake. So I think their stake is now 10% in GraphTech. So if GraphTech does well, HEG also like have a good value add. So they need not sell it, but they can hold it. Maybe in the future, if market and stars line up and EAF does very well, their shares goes really high, and then like HEG also has an optionality to either get these kind of dividends or like at some point also sell them. And of course, if GraphTech really does badly, you have a enterprise value as well, right? So there is also a possible acquisition possibility also in the future if it comes to that. So you get like a base asset at a very low price, and if it does well, you do very well because now this company is listed elsewhere. And of course, this is a competitor. This is not someone who does like a less amount of dollar value. They are a very big competitor. So you are taking stake in your competitor. So that means if the whole sector does well, you do well on your own business, and then you also profit out of your competitor's business. So that is a huge value add that I see in the company. So this is the filing where they have basically said that they have reduced their, they have increased their um, investment from 250 to 350 crores. Um, yeah, so this is an additional thing that they have in their side. Now the next part is going to be recently, or in fact, today's news in Bloomberg is that China is looking to cut steel production. So that's because they have a lot of um, steel industry on their side, which is like suffering huge amount of losses. So and also they want to move into electric arc furnaces. Now, it's not yet clear what will be the decision. So we have to watch for the China's NPC next week. And then there the policy guidance would be given. So the steel industry could go for some kind of re-rating here. So here, like EAF means electric arc furnace. So if electric arc furnace use the graphic electrodes and then like the blast furnace, they don't. So if China says that we want to shift more into the electric arc furnace, so that means that the graphic electrode demand will increase. Higher the graphic electrode demand, the consumption, and then so that also means like if more consumption is done, like more graphic electrode is needed. So so of course when China shift from blast furnace to EAF, so the geographic electrode demand will also rise. So so the use of graphic EAF is like it is more better carbon, or lesser carbon consumption. So which is like it's more greener. So that is also like kind of good. So in the short term, the graphic electrode prices will be volatile. It can go up, it can go down. We don't know. So we need to look and see. But then medium to long term, we need to also look at what is the China's policy, so which we will know next week. So that could actually like put a long term, if they move into the EAF, so that could really, really help HEG as well. So these are all the like the catalyst or possible things that we can see. So which is very, very good because as you know, what happened last time when China made these policy changes and the steel reform. So the graphic the graphic electrode prices like went through the roof. Like I'm just looking at the profit and loss statement for the last 10 years. You can see that from 2013 onwards, it it was like going through a lull period, and then all of a sudden, in China made a policy change of this, on the steel industry, where they want to cut the steel production because they were producing a lot of um, carbon like in the atmosphere, and like it was like all the Beijing was having pollution and so on. So they cut it at that time. So there were different drivers. So I'm not saying that the same thing could happen now, but I think if they are going to cut the steel production, we need if they are moving towards electric arc furnace, so that could be a very good kicker for for a long term because right now, as I said earlier, the electric the graphite electrode has a high moat. It's not easy to get into that. And even in the graphite electrode, you have the high power, ultra high power electrodes, which is what HEG specializes in. So maybe in the future, China can actually bring up their own technology, but it will take time. So it takes time to ramp up and so on. So yeah, this is something that we need to look forward and keep an understanding what's happening. But I would say like in general, when there is a supply demand problem in the market, and if it helps the steel industry and also helps the HEG with the pricing, so it helps. But then what happens is like when your steel graphite electrode prices also goes up, that affects the steel industry again because now their input price for the steel industry goes high. So then that kind of negates the thing. So whenever you see these kind of shocks happen, it only happens for like 1 to 2 years and then it goes down. So this is not a HEG is not like a investment where you buy and then hold for a long, long time, right? So you have to be looking out for what is happening in the industry, and then based on that, you make a decision whether to buy or hold or sell, right? So right now, if you see that they have been doing well, and you can see that their margins are not doing that much. But I mean, the good thing is they are increasing their capacity. Right now, they're only doing like 80%, but their plan is to like move into the 100%. So if you listen to their recent earnings conference and also when they appeared on TV in CNBC, I think they talked about um, they feel that H2 of this year is going to be really, really good. Um, because like they have like even if if the prices go up, there is some 3 to 6 months lag because they have a contract. So every 3 to 6 months, the contract prices get renewed. So that's when the prices gets kicked in. So they do have some kind of a delay. But then this is how their business works, right? So now why I like it here. So that is from a technical perspective. So in the previous video, sometime back, like a month or so back when I made it. So I was looking at this volume spike here from a technical point of view. You can see that someone, made a big decision to invest here in December, and it had a huge spike of like for almost like 30% in a month. But since then, it's been going down. But I think I would attribute this mostly down to the not to the company, but to the general market. As since the turn of the year, we have been going down in the overall market. So I think it's mostly down to that. So at this price, I think this is quite good for me to enter. Also, it's at a long-term support. You can see that here, if I just go to the monthly chart, this is actually coming down to some kind of support here around 317. So if the prices go down even to this point, I think this is where I will make an entry. And my view is like keep it for 1 to 2 years. Look at what China is doing and essentially make a case for it. On the again, like also I will show you what is happening in the EAF, which is a Graphite. So here you can see like they have done terribly bad. Like like they're having a lot of cost issues, so they have been like doing bad. But then this chart is only from 2019 because before that they were not listed really. So in this sense, if they do well, so let's say for example, let's take a base case, right? Let's say for example they are in a market cap of 300 million, and then just they are going to the enterprise value 1 billion, which is like almost 3x. So if they do a 3x, now if you have a 10% market, like right now for 300 million, um, they have a 10% stake, HEG, right? Then if Graftech goes to 1 billion, which is three times, so HEG will basically go to like 300 million, sorry, 100 million just by holding um, Graftech. Of course, this is mark to market, so this is not like goes into the revenue or into the P&L statement, but it's something that they have as a M2M, right? So 100 million is a word. So let's say if 2 years, 3 years down the line, they are selling it at that moment when that Graftech is at 1 billion, right? So you're talking about how much, 100 million US dollars, which is like almost, if I'm not wrong, 8,400 or 840 crores. So yeah, it's a huge amount, right? So that's the kind of investment they have made. So which is a very, very nice thing to do at this point here. So if the industry turns for good, the HEG is in for a killing. So that's my investment thesis here. So also, I want to show the steel industry what is they're doing. So if you see the Tata Steel and JW, JSW, they are actually on an uptrend really. So if you see back from back from um, they are actually reasonably doing well, and also JSW is also reasonably doing well. So steel industry is in a decent health. You can see that they are actually in the uptrend in spite of the market being down. They are actually doing well. So if the steel industry keeps doing well, and if China cuts steel production, and if that means that there is more demand for graphite electrode, or if China actually moves into electric arc furnace, and that drives the graphite electrode need, then HEG is in prime position. And not only they are in prime position, even if their competitor Graphtech gets that piece of the pie, and if they also grow, so then HEG in terms grow themselves. So yeah, so that's my take. Of course, this is not investment advice, and I'm buying here, so I plan to add even on dips. So I'll keep track of this quarter by quarter, and any updates, yeah, I'll post it in the channel. Thank you.